In the currency market, investors continue to favor the US dollar but are not rushing to buy it. Data on the labor market in the United States may lead to the Fed monetary policy shift. The report for November from ADP recorded the lowest increase in the number of employed for the last 2.5 years. Now, investors are preparing for the release of official data from the Department of Labor. We will continue to review it and discuss it in more detail. You are watching the InstaForex TV channel. Since this video was released late, we will not pay attention to other important releases that have already been announced, such as the trade balance reports in Australia and China. And there are more important events to come. For example, investors continue to keep a close eye on economic growth rates in the Eurozone countries. Previous estimates, both preliminary and revised, suggested that GDP had fallen by 0.1%. Notably, this was the first negative figure since the end of the pandemic, and this is a clear harbinger of recession. In particular, the fact of a technical recession is recorded after 2 consecutive quarters of decline. And the main brake on economic growth is a sluggish consumption due to the high ECB interest rates and the decline of a German industry. On an early basis, GDP growth is likely to be at the level of 0.1%, which cannot be called rapid or strong, so the investment attractiveness of the euro will not contribute to it. Meanwhile, markets are bracing for a decline in the rate of the euro-dollar pair. However, it's fair to say that the rest of the world is still experiencing bad times. The outcome in Japan is also bleak. Today, data on the GDP growth will be released on a Friday. If the preliminary data is confirmed, the Japanese economy lost 0.5% in the third quarter, and this means that a recession is possible here as well. Consumption, which accounts for more than half of the total GDP, is the biggest loser in Japan. Of course, this news will not boost the yen's investment appeal. At the same time, investors will be focused on this week's key event, the US employment data. We mentioned the disappointing figures of the ADP report, which showed a weak increase in the payrolls. On a Friday, the Labor Department will present its data. Often the trends in these two related reports coincide, but sometimes they differ. Analysts believe that the November report will show a change in the US non-farm sector of 185,000, and this is not enough for such a powerful economy to demonstrate a strong recovery, as it requires a monthly increase of 220,000 and 250,000. Therefore, the expected figures point to signs of a weakness in the labor market, forcing the Fed to consider its approach to monetary policy, more specifically to start easing, which could trigger US dollar sell-offs. The Consumer Sentiment Index from the University of Michigan for December will be released on a Friday. Sometimes this publication changes market sentiment, and the forecast is optimistic, but it's difficult to say whether big investors will take this data into account in trading. This news will be the main intrigue of the end of the week. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon!